and welcome to eOption. My name is Scott Berry. I'm a trader on the eOption trade desk. Today we are going to cover writing covered calls. Writing covered calls is the lowest or the most basic option strategy. When you sign up for covered calls, you're signing up for a level 1 options. The next level above that, level 2, would be buying calls and puts. But for today, we're going to cover the most basic, which is covered calls. What is a covered call? A covered call is when you own a security and you sell a call against that security to bring in money to your account. This is a good way when maybe the market is moving sideways or moving down, and you want to bring in some additional funds for a security that you may not want to sell at current levels, but wouldn't mind selling at a later date at a higher price. So today, the first example I'll use, as you can see, I'm on my positions and orders. We have 100 shares of Microsoft in our test account. So Microsoft, as you can see, it looks like we opened this in our test account. We're down a little bit on it. Maybe wouldn't mind selling it back above that level or higher. One way to bring in money is to sell a covered call against the position. You can bring in possibly a couple $100, and if the position stays here and the option expires, then you keep the premium. If the if the stock ends up going above the strike, you still keep the premium, but then you would sell at that strike price. So really, the one risk that you do get from selling a covered call is if a stock does move significantly higher, your profits are going to be basically capped at the strike price that you sell. So that's one thing to keep in mind. So let's start off with our Microsoft position. We're going to go into a option ticket. And I was already looking around the chain to save some time. We're going to go out not too far. We're going to go out to February. And as you can see on the left-hand side of the screen, Microsoft's currently trading around $222. So let's say you wouldn't mind selling the stock if it got back up around 250, but you can see what you could receive out in February for selling a $250 call against your stock. As you can see right now, you would bring in a little over $200 or 2 points on the option. That's not bad. The stock would have to move up roughly 27.5 points. Plus, you would receive an additional 2 points if you sold the option now. You can also look out an additional month. And let's look at the same strike, 250 call for March. As you can see there, you're bringing in, because of the additional month of time, you're bringing in 370. So let's go back to February, and we'll do the 250 call. And we will sell one of these at the market. We have our sell to open 1 February 250 call at the market. We'll verify, we'll hit trade. Now let's see. As you can see, we sold to open 1 Microsoft February 250 call at 218. So before commissions, that would be $218, less the option commission, be a little over like around $215. So what does that mean? It means if Microsoft stays here or stays below 250 between now and the 3rd Friday in February, we get, we keep the 218, and we also keep our stock. Now, if Microsoft were to go up to 250 or higher, let's say it was trading around 260 in February, You do have, you would forego the additional 10 points, but you did bring in $2. So it's really like selling the stock at an equivalent of a little over $252 or $252.18. Now, between now and then, one of the options you also have to do would be to, you could always buy the option back. As you get closer to expiration, the price of the option due to time value should decrease. So if it's trading around 250 or close or just under it, and there's maybe only a few days left, you could always buy the option back, hopefully for less than what you sold it for. Maybe you buy it at 50 cents just to kind of lock in a $1.50 gain. And then at that point, look at selling maybe another covered call further out in March or April. So that's how you would sell a covered call on a position you currently have. If you wanted to, let's say, start a new position, let's say you were interested in buying some Ford, and you don't mind where it's trading now. Ford's trading around $12.30. So I'll show you how to set up the whole position. You'd first buy your shares of stock. We'll buy 500 Ford at the market. And as you see, we bought the 500 Ford at $12.34. Now we're going to go in and look at the Ford options. And we have 500 shares, so we'll be able to sell 5 contracts covered. Let's look at the same month, February. Let's take a look at the 13 call. So if we sell 5 of the February 13 calls, we would make roughly 70 cents on the stock and an additional 43 cents on the option. If you want to go further out, as you can see, there's also weeklies listed here, but I'm going to stick with monthlies. We'll go to March 13 call. We would receive 62 cents. Selling 5 contracts at 62 cents would bring in a little over $300. So let's go ahead and we'll go out to March, and we're going to sell the open 5 of the March 13 calls on our Ford. We'll verify. You can see the estimated proceeds are $315 less the $199 commission and 50 cents. So our overall total proceeds will be around $312. We'll hit trade. Put our positions and orders. And as you can see, we sold our 5 contracts at 63 cents. So in conclusion, again, selling covered calls are sort of a way when the market's moving sideways or moving down, and you have stock positions that you don't necessarily want to sell at current levels, but wouldn't mind selling if they rebounded. This is an additional way to bring in income into your account and kind of do something while the market is in a state of sideways movement or downward movement. And if you are looking for additional information on covered calls, you go to eOption's homepage. And from the homepage, before you log in, under resources and in the education column, we have option strategies listed. If you click on option strategy and scroll down, you'll see all the option strategies listed alphabetically. Today, we did covered calls. When you open it, it will give a description of the strategy, an additional video, and further explanation. On the right-hand side, you're more than welcome to enter your email address. eOption will send you a daily market report to your email every day. Thank you for watching. And if you have any additional questions about covered calls, feel free to call eOption and speak with someone on the trade desk. Thank you.